People often treat the stock market exactly like a casino. They throw their cash at cheap, low-quality penny stocks, hoping a 5 rupee share will magically multiply to 500. Operating this way guarantees financial disaster over the long term. To build a portfolio that actually lasts, we are going to move away from guesswork. I am going to walk you through a 3-step system designed to prioritize risk management and track long-term market momentum. To execute this strategy, you only need 3 things: your investment capital, an active demat account, and the Investing Pro tool. By making these preparations, we are shifting from emotional gambling to a systematic AI-backed framework for building wealth over the next decade. Step 1 is building your primary defensive boundary. Instead of placing all your money into 1 or 2 companies, you must commit to holding a basket of exactly 20 top-performing stocks. Look at this 20-slice pie chart. It shows the structural resilience of diversification. If one individual company in your portfolio inevitably fails or underperforms, it represents only a small fraction of your total assets. The broader structure remains intact. This is also why we restrict our selection exclusively to top-tier companies. It forces you to ignore the lure of buying into small, heavily manipulated penny stocks. This 20-stock minimum ensures that your portfolio survival no longer depends on the performance of any single business. Step 2 requires applying the equal weightage rule. Once you have your 20 stocks, you must divide your total investment capital perfectly evenly across every single one of them. This typographic layout breaks down the exact math. If your total capital is 20 lakh rupees divided by 20 stocks, your equal weightage dictates an exact allocation of 1 lakh rupees per stock. Many investors make the mistake of pouring heavy capital into one favorite stock while starving the rest. When their heavy position drops, it drags the entire portfolio down with it. Equal weightage helps ensure that the losses from underperforming companies are capped, allowing the compound gains of your winners to drive the overall return. Step 3 is finding the right momentum. We use Investing Pro's ProPicks AI to definitively identify which 20 specific stocks possess the strongest upward trends. This bar chart compares historical 5-year returns. Standard Nifty 50 returned 54. Relying on data-backed AI completely shifts your role. You no longer have to predict the market. You simply ride proven momentum waves. Riding that momentum requires discipline. If the AI flags a stock to be dropped, you must sell it immediately, even if your position is currently sitting at a loss. This dashboard interface highlights the specific data-backed triggers the AI uses to make its decisions. When factors like valuation stretch or lagging return appear, the momentum is dead and the stock is cut. Consider the collapse of Yes Bank. When the price dropped from 400 rupees down to 300, many investors held on out of emotional attachment, riding the drop all the way down to 5 rupees. Ruthlessly cutting your losers the moment the AI prompts you protects your capital. It frees up cash that can immediately be deployed back into accelerating assets. You now have a framework for a diversified, equally weighted portfolio that responds to market trends using AI data instead of emotional impulses. Let's test how well you understand the mechanics. Imagine you start with a 4 lakh rupee portfolio, investing exactly 20,000 rupees into 20 stocks. 1 month later, the AI tells you to cut 5 stocks, and you book a profit of exactly 1 lakh rupees from those cuts. Here is the challenge. The AI gives you 5 new replacement stocks to buy. How exactly do you allocate that 1 lakh profit back into the portfolio? Do you stick to your original 20,000 rupees per stock and keep the profit? Or do you divide it? Put your exact math and strategy in the comments below. The most strategic answer will win a free copy of our Candlestick Patterns book. While you're down there, tell me your current favorite stock and why you think it's going to grow this year. If you are ready to use the software we covered today, use the discount link for Investing Pro in the description. Applying these 3 systematic steps consistently is the true differentiator between gambling and genuine wealth creation.